Hello, everyone. Good afternoon. Welcome to our webinar today. We have a lot of people funneling through just now, coming in, so we're going to wait for a few minutes and, well, to allow for more people to join. So while we're waiting, I would love to hear where you guys are joining us from today. How many listings do you manage? What areas in the UK are they located in? You can use the chat box for that. So do let us know, but we're going to wait for a couple of minutes to allow for more people to join. Guys, don't be shy. Send us a message in the chat box. Let us know where you're joining us from. I see a few familiar names. So welcome to everyone who's just joined. We're not gonna wait too long. We're gonna be just 1 or 2 more minutes, allowing for more people to join us. Hey Marie, Lake District, awesome to have you here. Thanks for saying hello. Thanks for being here. I see Federica here as well. Hey Federica. All right, we're just gonna give it a few more seconds and we'll start. Hey Abira, welcome. Hey Ellen. Lovely to see we have attendees from different areas in the UK. I think we're good to go. We're not going to keep you guys waiting too much longer. Hey, Federica. We're not gonna keep you waiting too much longer. I think we're gonna start now. So just to say welcome again to everyone. Lovely to have you here. Thank you so much for joining us. And please note that if you have to drop off at any point or anything like this, we're going to be sending out the recording. The session is being recorded, so we're going to send out the recording 1 or 2 days after. And you can also, of course, always catch it on our YouTube channel. So let me start off by introducing the topic today. Today, we're going to talk about summer market trends. What did we see last summer? And I think from all the conversations I've had throughout the last few weeks or months, it seems to be the same trend that we've seen. So I think that the data that you'll see on the screen is not going to surprise you too much. We're also going to have a look at what we're seeing forward for the next couple of months in autumn. We're already in autumn. So we're gonna have a look at that and we're gonna talk a little bit about how we can adapt. Now, I am talking for the last few minutes, but I am actually not alone here today. So today I have Simon Pine joining me as a co-host on the webinar. Simon is founder of Pure Service and Smart Welcomes. Simon, can I trouble you to introduce yourself to the audience today?
Yeah, hi everyone. Welcome from sunny Devon down in the West Country. My name's Simon Pine, founder of Pure Service and Smart Welcomes. We started about 9 years ago now in the short-term rentals market, and we started with some of our own properties. And over the past few years, we've expanded quite a lot, and we now have a mix of our own properties and manage properties on behalf of other people. We've got 71 properties at the moment on the books. We've also got our own 22-bed guest house, and we've done a couple of pop-up hotels in the city as well. We've got our own commercial laundry and employ 21, I think it is, housekeepers at the moment as well. So everything, certainly the payroll gets bigger every year at the moment, and life's always challenging, but it's good to be here speaking with you guys.
Thank you so much, Simon. Good to have you with us, and I'm sure that we can all learn from your experiences because everyone is located in different locations. Obviously, they manage different portfolios. Good to hear that you also have a mix of portfolios, a mix of clients as well, guests that are staying with you, and that you do a varied range of everything, of
It
different
is
things
varied, yeah,
within
yeah,
your
yeah, yeah.
business. And I think you'll agree that revenue management isn't just about pricing, it's a lot more than that as well, right? So we have to
Yeah,
consider.
we have a huge we we concentrate a lot on the strategy on revenue, and a lot of it's numbers, but a lot of it's people as well. And it's combining those two bits is the key.
Yeah, perfect. Great. All right, guys, we're gonna get started with this. Bear with me just 1 second because for some reason my screen disappeared, so I need to get my presentation back. 1 second. Sorry about this. Let's have a look. I'm gonna stop the sharing for 1 second. All right, we're back up. All right, cool. Sorry about this. So here's today's agenda. This is what we're going to be speaking about. We've got UK summer performance review, as we said. After that, we're going to talk about fall trends as well, or autumn trends, more of a UK word in the uh, key markets. Key markets. So in the beginning, we're going to look at UK as a whole, and then we're going to also focus on specific areas in the UK. I'll be very honest, I was meant to pick 3 areas. I couldn't stick to 3. We've got 5 on the agenda for today, but I think that's okay because you'll notice that the trends that we're seeing, they're very similar. Okay. We're going to also talk about some practical tips to win autumn. So what can you do to adapt? Also coming through to the next section, how PriceLabs helps you adapt. But what can you do to adapt in between these changing seasons? Because definitely what we see in summer, when it's maybe our peak time, is not the same as what we see in autumn. But autumn time and every single season also has its peak moments. So it's important to be prepared for them as well. And of course, at the end, we'll finish with some key takeaways and Q&A sessions. With the UK summer review, we're going to look at the next few slides, which are going to show us a little bit more information on what the supply was. So how many active listings were in the market month by month. I'm pretty sure we displayed the information since 2022 up until end of August. We're going to look to see what the demand was. So how has the demand been kind of in the last year compared to the same previous period. And we're going to talk about for UK level and for key regions, what was the occupancy and what was the average daily rate or the ADR. So we're going to see how that's shifted, and we're going to see that there's a connection between kind of all of the markets on a general level. Of course, every single listing has its own hyper-local market and it performs differently. But this is on a UK scale, and then we're going to obviously look at some key regions. And one more thing we're going to look at here is also booking windows. How did they shift? How did they change? That's kind of the lead time in between today and when a reservation actually gets confirmed. So if we look at the summer supply for listings in the UK, we can see that, okay, not only the summer supply, but we can see that from kind of 2022, the supply has grown quite a lot, right? So there is a significant rise. There has been periods where it's been higher, and generally we see that in the summer periods, then it might slightly dip, but overall we have a lot more active listings in the UK since 3 years ago. June saw a rise, July also saw a rise, we can see here, but August saw a little bit of a dip of active listings, which may be a little bit strange because August is still peak season, but there could be a lot of different reasons as to why we're seeing dips in active listings. So some of these reasons might be that regulation, licensing, planning restrictions, things like this have kicked in where property managers have had to adapt to these new or strict regulations or impending regulations. So temporarily hosts might have to withdraw listings to ensure that they're compliant, or they might be waiting out on some policies. Other reasons might include that property managers might have chosen to close off some of the listings because they aren't as profitable and they might have wanted to focus on other listings that are performing much, much better. And then also there is this thing where maybe some of the listings are returning back to long term, or maybe owners are not listing their listings anymore, or maybe they're using it for personal use. These are just a few reasons as to why we might see this dip of supply in the market, particularly in August. But I think, Simon, you're on the ground, you're seeing what's happening, you're very much in touch with local regulations or things that are coming in. Do you have any thoughts on why we might be seeing a dip in August in particular?
Yeah, I think we're seeing uh, a reasonable number of landlords converting away from short-term rentals back to longer term residential lets. There's still new properties joining because a lot of people will buy a property now, refurb it, and then it won't be able to come to market probably for 12 months after they've bought it. So their strategy is still let's go for the short-term rental market. But there's definitely signs that some people in the market are reverting away from short-term rentals back into longer-term rentals to secure and at times increase their returns, because obviously then there's no operational costs of housekeeping and laundry and maintenance and all of those things.
Got it. And these costs have significantly increased, I guess, all of these
Yeah,
maintenance,
they
laundry.
are
Yeah.
considerable now. Considerable.
Okay. Thank you. That's good insight. Um, Again, let's talk about the demand in 2025 versus 2024. We can see if so the gray is 2024, the red is 2025, and we can see that in previous months demand was higher than 2024. But what happened in May, June, July, August is we saw that the demand was actually lower. Now, so why was it kind of different from the last previous months to the months of May, June, July, and August? This probably has to do something with the fact that as the supply increases for these months, due to that increase, also we expect that the demand will also increase. So it's kind of goes hand in hand that as the supply significantly increases, so does the demand have to increase in such a way, in the same way. And if it hasn't increased so much, then of course, it can't stretch out so much. So it looks as if the demand has actually decreased, but we have to take into consideration that the supply has significantly grown as well. So even if the number of bookings might not have significantly fallen, at least not everywhere, the occupancy essentially seems to be lower because the supply has grown so much. And as we said, other factors might kind of include the fact that, as Simon also mentioned, cleaning, maintenance, utility bills, they have gone up. So property managers also need to raise their prices in return, which obviously affects um, the guests that are booking. So with this in mind, let's have a look here. I want to launch a poll. And the poll is, I want to ask you guys, how was demand this summer? You can only pick one answer. So the answers are, it was higher than last year, it was lower than last year, or it was the same. I've just launched the poll, so let me know when you can see it. And I'll wait for you guys to respond. Just gonna wait another couple of seconds. All right. So I think the general consensus is that, oh, it's changing. Demand was higher than last year. Okay, 47% for demand was higher than last year, 33% for it was lower than last year, and then 20% of you answered that it was the same. All right, there we go. Hopefully you can see it on the screen now. Cool. Let's get rid of this one and we will continue. Let's see, we have a chat. Jenny, depends on the market you cater for. Absolutely, yeah. It absolutely depends on the market that you cater for. So whereas we're sharing insights for the markets, we also know that every area has its own also micro markets. Now moving on to occupancy and average daily rates, you're gonna notice this trend is quite similar for the different areas that we're gonna look at in a minute. Occupancy in 2025 stayed similar to 2024, which does show that the demand held steady, even though the market didn't kind of change so much. Good news here, I think across the board, is that average daily rates were higher across the 3 months for the summer. Roughly, if we look at the whole of the UK, it's around 10 to 15 pounds more than last year. So it just shows that hosts were able to charge a little bit more without actually losing on bookings. And then this is something very big that we noticed as well. We noticed that guests tend to book later this summer. So the booking window or the lead time actually dropped. And in June, it dropped from 34 to 30 days compared to last June. This does reflect a broader trend that we've seen across the market. So travelers are typically waiting longer to confirm their plans. And that's likely due to price sensitivity, I suppose, or uncertainties around the travel arrangements, or the weather maybe, because we've seen some shifts lately for sure. But yeah, this is kind of a change, I think, for the property managers themselves. So it's important to stay dynamic in that sense, and pricing and availability needs to be more flexible because we know that bookings are actually happening closer to the check-in date. So we're not expecting to see this larger booking window that we were before. Actually, people are now looking around, they're waiting to decide what they should book, what's the best value, what's the best location, and they tend to be booking a little bit closer to the time. Simon, is that something you're seeing as well across your portfolio?
100%. Yeah, we 75% of our bookings are now made within 30 days of arrival.
All
And
right.
last year, the same number was about 67%. So
That's a big difference.
big difference.
Yeah.
It makes operations a bit harder to control, makes forecasting a bit trickier. You just have to be quite reactive
Yeah.
and to plan for it as much as you can.
Absolutely. What, just if you can think off the top of your head, what operational changes have you had to make in order to accommodate for these last minute bookings?
Um, it's probably in the summer months. It's definitely around availability of housekeepers. If you get a flurry of very last minute bookings,
Okay.
our housekeeping team gets very stretched over the summer.
Yeah.
And if we suddenly at 7 o'clock in the evening get another six bookings come in, doesn't sound a lot, but actually that could be same night bookings, and suddenly you need more people for tomorrow, and it's quite hard at times to make that happen.
You need to plan, right?
You've
You
got
need
to
to,
have, yeah, you have to be more and more flexible
yeah.
in terms of how you can achieve stuff, and trying to get the property's guest ready
Yeah.
is at times we stretch just to
Yeah.
achieve that during the day.
Absolutely. And because we're now more open to this flexibility and receiving bookings a little bit earlier, I suppose we also need to be, in order to receive these bookings, for them to come in, we need to also make sure that we don't overcharge when that booking window kicks in, that we don't expect people to book for like super long amounts of stays.
Yeah,
At the same time, very important to note is that maybe you should hold out on your rates a little bit more and not panic and not slash them and drop them so last minute. Because we know that we're going to see the bookings come in. We've seen that, occupancy has stayed steady. ADR has actually risen, excuse me. So it might not be appropriate to actually slash our rates so much because we know that, hey, if we wait out a couple more days and not panic, we might actually get a nicer booking than if we actually cut our rates in half. So that's important to also acknowledge and see the trends that are happening. So here are the regional insights for summer that we're going to show you. I'm not going to spend too much time on each of them. And the reason being is that, as we discussed, all of the trends are quite similar. So here's a little bit of historical information, after which we're going to move over to how we're seeing autumn pacing and what trends we're seeing there. Of course, we're going to start off with London. London, we are comparing here, as for London, as for all the other regions that we're looking at, to 2024 versus 2025. So occupancy has remained stable. As you can see, there's not much of a difference, but ADR has increased. So again, we're seeing that while occupancy remains stable, actually property managers have been able to charge a little bit more. So that's definitely a sign I think we should remember. Have a look to see what the occupancy is like. Have a look to see when people are booking. So what's the booking window? And maybe don't panic too much. And yeah, wait to see the market trends first before you panic and slash your prices because things seem to be happening a little bit later this year, but rates still seem to be holding up. Cornwall, summer hotspot. So here again, we're seeing actually occupancy is higher, not too much higher, but occupancy is definitely higher compared to last year. And ADR is similar, a little bit higher as well, but it hasn't changed so much this summer compared to last summer. But the good news is that there's no negative dip here. Devon, Simon, this is your territory. So your listings are located in Plymouth. which is a lovely coastal town in Devon. And we can see that both the demand and the ADR have stayed stable. They've remained without any huge changes. So can you share insights on what you saw this summer? Because maybe Plymouth had a different result than Devon in general. It would be good to hear what you saw.
Yeah, I think our occupancy's been broadly the same last year, but our ADR's gone up 8%. So um, that's really encouraging to
Yeah.
try and help us cope with the ever rising costs of operating. So um, we pretty much reflect what those graphs are telling you. So
Okay. So overall, it's been a good result, right? Occupancy is stable, ADR is rising.
the ADR is the ADR is good. We've
Yeah.
one area we've been winning in a bit recently is average length of stay, but I'm sure you'll come on to that later on, to be honest. So
Yeah, actually tell us about this because it's interesting to understand how that's changed, I suppose, from last year.
so
Particularly for
across
summer.
our business, because we've got the pop-up hotels and the guest house, our ADR was historically about 1.7 nights. And this year we've nearly added a whole day to that. So we're up to about 2.6.
Okay. The
Um,
average length of stay, yeah.
yeah,
Yeah.
yeah. And that just because of the volumes of what we're doing, it it makes significant changes to our operational efficiency. Uh,
Okay.
in simple terms, we clean less and we change beds less. So actually it has a big effect to our bottom line numbers when we can get that length of stay extended.
Awesome. And does that just prove that people are willing to stay longer nowadays? Do you think that they're looking
I
for
think
someone?
we've been working on minimum length of stays throughout the year to try and have that as we've had it as a specific target to try and increase it. And you have to constantly be looking at individual properties and constantly checking what's going on. And we've been actively pursuing longer stays,
Yeah.
um, understanding the impacts that a 21 night stay has rather than 21 night stays. You know,
Yes.
the two, yeah, I know that's a bit of an extreme, but there you can actually drop your pricing, so to speak, if need be, on the 21 night stay quite considerably to achieve the same as your 21 night stays.
Yeah.
So
Making operations a lot easier.
we've been looking at the maths of it as well, and just ensuring we can understand what those differences are to help
Yeah.
us try and stretch that average length of stay all the time.
Perfect. Thank you. Thanks so much for sharing your insights. I'm going to move over to Cotswolds. Again, Cotswolds is a big hotspot. You have higher occupancy and ADR. So again, you're seeing that curve, not too much of a change, but it's a good positive change for sure. And we also have Cumbria included in here, which shows again higher occupancy and ADR has remained kind of stable, but again, it's higher, so that's definitely good news. I think across all regions, you can see the trend seems to be the same as we saw in the UK wide trends. So um, overall, we're seeing stable occupancy, we're seeing an increase in ADR, and we're seeing shorter booking windows, right? So if we have to just have a look at the summer key takeaways, so supply grew earlier this summer, but actually it softened and kind of slowed down a little bit in August. We discussed the reasons why. Um, Demand saw a decline as well throughout the summer. So the book nights kind of decreased a little bit. But the good news is that ADR actually grew, and that's the most important thing. We looked at different regions. We saw that there's kind of a similar curve, but while UK and London occupancy remains similar, ADR increases. Um, we saw the same for Cornwall and Devon, so high occupancy, similar ADR, Cotswolds and Cumbria as well, with rural travel on the rise. Again, that's seeing again a higher occupancy. Good to note is that these are wider regions. So, for example, if you think about, I'm just going to use Plymouth as an example, Simon. Actually, Plymouth saw a much bigger, if we look at it just on a city level, a much bigger rise in occupancy and ADR than what we saw in the whole region of Devon. So it's important to remember that each area has its own specifics, be it because it's right on the seafront, the same apply, or somewhere quite rural and it's difficult to get to. So maybe, I don't know, people are a little bit hesitant because they have no modes of transport or something like this. So it's important to um, factor in where am I, what is it that I'm offering, who do I want to attract, how can I include all of the information that I have available on my listing as information to help guests actually to attract them and want to come and stay with me and essentially increase my demand. But yeah, very important to consider things on a hyper local level because every little micro market has its own specifics. But good to see a rise overall. And guys, I think you're sending me some chats and messages. I'm not able to get to them at the moment, but we'll try and leave some time for a Q&A at the end. So apologies if I'm not answering your questions live. It's just me here today from PriceLabs, but I will do my best to answer your questions afterwards. If I don't get to all of them, we'll definitely get back to you by email as well. All right, looking ahead at autumn. So here we're gonna be talking about the summer trends that we're seeing, and I actually have another poll that I wanna launch now. So the poll is, what is your biggest challenge you face during autumn? This is actually a multiple choice one. So launching it now, please have a read and tell me what are the biggest challenges you face during autumn. Is it low occupancy and demand? Is it price competition and protecting your margins? Is it getting owners to agree to flexible strategies? Or is it the shorter booking windows and last minute bookings? We're just going to wait a couple of seconds. Oh, it's changing quite a lot. Gonna wait 10 more seconds for everyone to vote, and we're gonna end the poll. Still changing. We have two which are equal at the moment. Very interesting. All right, guys, I'm gonna end the poll, so hopefully everyone's had a chance to vote. Let's have a look. Sharing the results with you. So low occupancy and demand, as expected, I think that's kind of the top reason here. And then followed by price, owners to agree to flexible strategies, and shorter booking windows or last minute bookings. Thank you so much for answering. Right. So strategies for autumn. What's very important is, I think what we hear a lot is, this is what happened last year, and this is what I'm going to do this year. But actually, that might not be the case. And I think we've seen that a lot in terms of how different markets are booking up. So it's important to use that historical information you have, to use the forward-looking information you have, and to understand, as of today, how is my market pacing for the future months. So basically what you're doing is you're comparing last year with this year, and you're seeing, hey, is the market starting to book up at the same time? Is the same length of stay being booked? Okay, maybe I'm doing things right, but actually if bookings haven't started yet, and last year we had so much occupancy and this year is just so slow, it means that what you did in the summer or even what you did last year probably won't work. So what you need to do is adapt to this new booking behavior. As we said, guests might be booking closer to check-in. That was one of the answers that was quite, voted on, that last minute bookings, shorter stays. So we need to make sure that we stay flexible to capture that kind of late demand that's coming in. And very important. Autumn for many markets might be a low season, but every low season has its peak demand dates. So, for example, in October, school half-term dates, we're seeing peaks or little pockets where demand is rising for family holiday regions in the UK. Okay, so schools, they're off from very different periods. I've included in here 13th until the 31st of October. Have a look to see in your area or generally in your area, when is the demand peaking, because people might be traveling down from different areas that have different school dates. But be aware of these kind of rises in demand, and don't slash your prices, or similarly don't increase your prices too much just because you're waiting for that high demand. It's probably not going to be as strong as summer, but be in line with the market, and just make sure that you're adapting to that. And of course, Christmas holidays is another one. For Christmas, you probably might want to have actually a longer stay than you would have for a date in November, for example, because you don't want to have too many turnovers, right, during Christmas time. So make sure that you're capturing these spikes. So holidays and weekends, they tend to drive these spikes, and make sure that you're adapting them and that you're adding these rule sets for these different dates as well. So what are the regional insights that we're seeing for autumn? Again, here we're going to talk about how is the market pacing compared to last year, future months, right? October, November, December. We can see that, and this is as of so when September ended, that's when we kind of have our data from, because we need to look at the full month. So we can see that October and November, they were actually pacing a little bit behind. But December is kind of on par or pacing a little bit quicker than it was last year. So occupancy has remained the same if we compare it year on year. For these future dates, right? Remember, these percentages, they're gonna rise the closer we get to the end of November. This is going to rise because bookings will start to come in, occupancy will start to come in. So obviously they will rise. But again, good news is we're not seeing ADR fall for London. We're seeing that the average daily rate is actually rising. Cornwall, we're looking at the same regions again. Well, occupancy was pacing a little bit slower, but actually it picks back up in December. And we're seeing a very similar flow for October and November in terms of ADR at the moment, but actually it's significantly rising in December itself. Okay, and that's most probably because of this Christmas period that's coming up. Devon, both the occupancy and the ADR are slightly behind. Simon, you told us a little bit about, how you adapt and how you change and what you actually do in the summer to adapt to these changes that you've seen since last year. But what do you do? What changes do you make from summer to autumn in order to adapt to the type of guest that would be arriving in this season as opposed to the summer?
Um, our seasonality is quite significant. So November, December, January, February are horrendous in terms of seasonality for us. And that's purely based on the volumes of people coming to Plymouth, the city where we operate in.
Yeah.
So we have become quite aggressive on pricing
Okay.
through that period. And we also have been chasing and being more aggressive in trying to secure some of the longer term corporate style bookings that are around, because they can actually see us through the winter period if we pick them up at the right money. our occupancy goes all the way down to 30% in January each
Okay.
year.
Yeah.
Um, and uh, and so we're constantly being aggressive on the pricing to try and at least hold our market share of bookings, if not win a bit more, and then
Okay.
combine that with being more aggressive on the longer term booking pricing allows us to retain some cash flow through that period.
Okay. And do you identify the pockets where the demand is higher and do you try to maximize on that or do you stay aggressive throughout the whole
Yeah,
period?
so next week, for example, is a key week for us as the university have their graduation week next week.
Okay.
It's the university have changed that. They used to be in July, and actually didn't really work for us in July because we're busy anyway. Whereas
Okay.
whereas next week it's worked for us really well because we're starting to get quieter. So we're very conscious of some key dates. Um, but most of the key dates in the city are in the summer. They,
Yeah.
the big events happen in the summer.
Okay.
There are some key events like school holidays, half term, and those sort of things, and New Year's Eve. But we certainly price upwardly in those areas because what we've learned over the years is we have to make more in our key moments to enable us to defend the lower moments.
Yeah. Okay. Thank you. So there really is this dip, right?
Yeah,
If we look at the Cotswolds here, again, we're looking at how is the market pacing for the future months compared to last year. Well, occupancy has actually stayed quite similar, maybe a little bit ahead of last year here. But ADR is also rising, so that's good news, and not by a little. I mean, it's quite good, right? You can see the rise here from 140, 152. So ADR is really kind of holding up in the Cotswolds. And the last region that we focused on, and I'm so sorry we couldn't focus on more regions, but we definitely do have this data on PriceLabs, so feel free to explore our market dashboards as well that do show this information. But for Cumbria, again, occupancy is remaining similar, so market is being booked up very similarly to the way that it was being booked up last year. And the ADR is also remaining stable, so not much change is happening here. That's it with my graphs. I'm going to stop talking about data now, and we're going to move over to, well, spotting trends, adapting to them as well, and adapting to the way that the market is moving. So what's already working in the background. Here we're talking a little bit on an educational piece about PriceLabs, just so that you know what's already working in the background that's helping you without maybe even realizing. Although I think that everyone here on the webinar is very much aware of well, how your prices are being formed every single day and what are the default factors kicking in order to change your prices or to price your listings for every single day moving forward. Before I move over to three key things that I've highlighted, I just want to mention very importantly, one of the key, so we've grouped our market factors in two sections. Of course, within each one of these, there's a lot that goes in there, so it's a very complex algorithm. But the first thing is the seasonality. And seasonality, in simple terms, is basically how demand for a particular season fluctuates in the market based on the time of year. So PriceLabs will automatically calculate that for you, and it does it on a hyperlocal level, right? So we already do that in the background. You don't have to sit there and research when is my high season, when is my slow season. Second very important thing is the demand factor. Our algorithm captures the demand around specific days like holidays, events, and that happens on a national level, but also it happens on a hyperlocal level. It also looks at day of week trends and patterns and all of that. So I just wanted to mention that if sometimes, you know, um, there's a big festival or a concert, we kind of only tend to think about the exact dates of that concert or that event or whatever is happening that's quite a big event around you. But most of the time, what we see on Price Labs is that actually there's a huge peak in demand around those dates as well. So maybe the day before, maybe the day after, people are arriving a day earlier and they're making a holiday out of this event, or they're staying a day earlier to explore the city, or whatever it may be. So, or to get some rest in a very tranquil location, I don't know. But it's very important to spot this increase in demand as well, because these are also important key dates that you can maximize on. It's not only about the exact date of the event itself. Apart from that, I wanted to bring your attention to something that's internally based on your internal occupancy for your listings. So that's very important. I'm sure that all of us, even if we're not using this setting for whatever reason, we probably think about it if we don't even do it manually. But we tend to, in our minds, think about, hey, if I am doing very badly in the next 2, 3 weeks, obviously that's now last minute coming up, I'm going to help my listings by slightly providing gradual discounts to help me boost my occupancy. So similarly, if I'm getting booked up very well far ahead, I might want to increase my rates because I don't want to be the first one to get booked far out, for example. So occupancy-based adjustment customization, this is something that works for you by default. The default setting is applied on there. If you go into your customizations, you can have a look at the table, see exactly what's in there. There are different pre-made profiles available for you as well. But this is a gold tool to help you adjust your prices based on how you are performing, your listing's internal performance. Last minute and far out prices. So this is kind of an always on protection for short booking windows, right? Last minute. Last minute prices and far out increases, they are kind of happening. You don't have to worry about them. They are market driven. What I wanted to mention is whenever you have discounts stacking up, remember that you also have a minimum price that you've set on your listing level. So whatever happens, we're never going to go below that minimum price. But why is it important to have this last minute and far out pricing enabled? Especially, I would suggest personally to have it on the market driven side, which means that we're capturing, so PriceLabs, what it's doing in the background is it's capturing this information about your market, how is the market being booked up, and it decides whether or how much of a last minute discount it should give. And this last minute discount is going to be highest on the day, today's date for tonight's bookings, but it will gradually decrease over the next few days. So you're not panicking and slashing your price last minute. Actually, as your booking window draws in, you're slightly starting to provide some discounts and aiding basically your occupancy and trying to get some bookings in the books, because we know that your window of possibilities is becoming shorter to receive these bookings. And then one last thing I just want to mention. Oh, by the way, far out pricing is super important as well because it protects your rates far out. So you don't want to be the first one to get booked. What we do is we automatically again start to increase prices very gradually. It's not going to be a massive lump. So it's going to be very gradual, but in case of an event that gets announced and you're not aware of it, you can be sure that you're already protected with some high prices for far out stays. Very important. Your base price is your anchor. So everything in the pricing is built around your base price. And while your minimum price ensures that you obviously don't get booked at a very low price, the base price is what everything is calculated upon. So demand factors, seasonality, occupancy-based adjustment, last minute prices, all of these come off or on top of the base price. PriceLabs monitors your listings performance in your market. Very important. Please check your pricing dashboard or your multi-calendar or the listing itself. If you ever see a nudge like this, there must be a reason for why we're recommending it. Base price is market-based nudges. We see how you're performing, so it will be something to do with your listing in the market. Minimum price nudges are based on how often am I hitting my minimum price. So very important to keep an eye on this. And identifying where demand lies. So I want to ask Simon, you're in the spotlight now. What is your go-to most loved feature, I guess, which works for you, which is automated on PriceLabs, and helps you to adapt in these changes of seasonality and demand and the market trends that we're seeing, something that works in the background and you don't have to think too much about it.
I think for us, it's the reality that once we've set everything up, Price Labs is always on 365 days a year, looking ahead all the time, because the reality is we all wear a number of hats during the day and in the evenings, and pricing is one of those hats, one of the most important hats. But the draws and demands on businesses are quite varied. So I think once we understood all the capabilities of how Price Labs can help us, and then set it up, hopefully the right way, it just allows us then to be confident that there's always something happening.
Okay.
And then we also look every single day with a pair of human eyes at the pricing, so that we're using our experience as well. And something might jump out of the screen at you, and the whole multi-page view is super important for us to look at. So there isn't any one feature. It's just the reality that if you set it up the way that you understand it, I think it's really important to understand what you've set up, and then you can then start tweaking it and have it tweaked for certain properties and not other properties. It's
Yeah.
very adaptable and straightforward to use, whereas some of the other systems on the market are not as straightforward as that.
Okay, so
Um,
basically automating all these little things that maybe we do. But you mentioned something very important. It's while it automates and it saves you a lot of time, it's not a set and forget system. So it's very important to make sure that you keep an eye on it, right? So you go in, you check
100%,
it.
because we
Yeah.
because we and Price Labs get it wrong.
Yeah.
It's and there's nothing worse than going, crikey Moses, that someone could book that property for £12 next week.
Hopefully you've
And
set your minimum prices up.
yeah, well, yeah, it is. And I mean, normally we had a big learn in the summer where we deleted nearly 2,000 um, booking.com overlays, because over the years they built up,
Mm,
and we were just simply not achieving the price that we were expecting from
yeah,
Price Labs.
yeah,
So we've deleted 2,000 of those and are starting from a 0 point to enable us to just hone down our skills and become better all the time. It is such an important side to the business that you can't just let the software do it. There has to be interaction on a daily basis
yeah,
to combine with the software to
yeah.
try and give us the best result possible.
Brilliant, perfect. That's very important. And yeah, something that Simon said is actually conversations I'm having every day. Be aware of what you've input after your dynamic pricing system, because there might be things that are pushing your prices down. And then if you don't have any safety nets, you might essentially be in trouble and be selling very low.
Yeah, so
Um,
I love the
yeah.
system and I would recommend it to anyone who doesn't use it. Okay.
Thank you. Good to hear. All right, so I'm gonna show you guys how do we identify where the demand lies? Hopefully everyone has used this. And if you haven't, I urge you to go into your neighborhood data tab. It's on your listings pricing calendar. Second tab along that will be neighborhood data tab. Brilliant way to see how is the market. Well, first of all, where is your price aligned in the market? Are you in the economy, mid-scale, upscale segment? And the second thing is to see how is the market booking up. This is this pacing thing that we're talking about. So as of today, how is the occupancy in the market looking like for the future? Here we see a huge peak in demand. Here we see a little peak in demand. These are your go-to dates. So identify them and be aware of what's happening in your market. So spot these demand shifts. Absolutely free to use on every single listing. You will find this information. Please go and check it out. And second thing, track your competitors. Don't price match against them, but see what they're doing. Kind of benchmark listings and make sure you stay competitive. Why am I saying this? Because if no one in your market charges a cleaning fee, your prices are kind of in line, and then you charge a cleaning fee of £350 on top, and you're wondering, why am I not getting booked? That might be a reason. So in the neighborhood data tab, competitor calendar allows you to add competitors around you and see what is their cleaning fee like, what are their prices like, are they booked, are they available, what's their minimum stay restriction like. So it just allows you to make sure that you're also relevant in that market around you. Communicate better with owners. Why do we need to communicate better with owners? Obviously, today we are here, a lot of property managers, a lot of you guys see these changes in the market, and unfortunately, you have to convince your owners to adapt to them. So, one of the things that I would also urge you to do is use our reporting tools on PriceLabs. So you can create owner-ready reports in a few clicks. You create your own report, you say exactly what you want to include in it, demonstrate how the market is pacing. So use that pacing data to explain your strategy for the future. So why do we need to gradually reduce our minimum stay restrictions closer to the time? Why should we add last minute discounts? Why should I decrease the minimum price by 5% in November, for example? Use all of this information to be able to convince the owners that, hey, this really is happening. It's just not me. It's not just me saying it, but this really is happening. And we need to adapt to this, because I know that for sure these conversations are very difficult. And minimum stays. Minimum stays are, well, the second most important thing after your pricing, for sure, when we're talking about revenue management here. So until now, I think that what most people used was, I'm going to say it's not static, but it was automated. So automated dynamic minimum stay restrictions. So we would basically put in our minimum stay restrictions. We would make them layered so that closer to the time they reduce, further out they increase, and then we open up orphan gaps, or maybe we have adjacent stay minimum stays. That's great. It really helps. So make sure that you're still doing this, but also explore our new feature, dynamic minimum stays. So this looks at the market. Okay, you have three options depending on what properties you're managing: short-term, mid-term, or multi-unit rentals. Okay, this looks at the market. It looks at how is the market performing, what is the length of stay for that month and period, and it will automatically, for every single month, have the relevant minimum stay restriction in place. And you might notice that this changes throughout the month as well. Whenever we see shifts in the market, your minimum stay restriction will also change. So this automatically adapts these stay rules to the guest behavior that you're seeing, because everything we saw, it kind of reiterates the fact that guest behavior is changing and we need to adapt to it. These are your basically custom minimum stay profiles. So we explained that until now, most of us probably entered it in by hand, but to save you time, make sure you're using those minimum stay profiles, which you can also attach to different seasons. So those are super helpful as well. we're at the end of of our presentation, guys, with 1 minute to go. So I just want to highlight a few kind of final takeaways from today's webinar. Uh, we know that there was higher supply in listings while the demand stayed lower this summer. We know that demand is shifting into pockets as well, so make sure that you're aware of when our traveler is booking. Is it later? Is it, actually people now starting to book ahead for summer? When are the spikes happening around the events and the holidays and the weekends? And when are people starting to book for the future months? So make sure you know what the pacing is and stay flexible. So this neighborhood data tab, all of these smart price adjustments and customizations that we have, dynamic minimum stay rules, all of these things help you to spot and capture that demand quickly. And that's exactly what's going to help you to stay in line with the market and make sure that you're not losing out on opportunities. We want this to be automated for you, so less work on your side, but more awareness, you're educated, and also don't just leave it for a few months. Make sure that you do log in a couple of times a week to check over what's happening, any recommendations, and all of that. But those are our kind of final takeaways. Simon, can I ask you to share one actionable tip that you're using for this autumn? Something that you would recommend to other property managers as well?
Yeah, we are constantly looking at our base rate and our low rate, constantly looking at it. The hotels around us are killing themselves with their pricing um, over the winter months, autumn and winter, and it's, if you're coming to stay in the city, it's fantastic. You get a hell of a deal. But we've got to be careful not to be caught up in a competition that we won't win. So we constantly are looking at those two key numbers and taking a view on some properties and not on others. So really,
So
really
monitor
powerful
your base
data.
price. Yeah.
Yeah, well, it's the base and the lower one. Yeah, the
Yeah.
two things,
The
the
minimum.
two things combined.
Absolutely.
The higher one is we've actually we've got a high price on everything rather than leaving it empty, because we found that helps us not appear miles out of kilter, because there are
Okay.
times when that high price didn't quite work for us. But yeah, the key for us at the moment is those two prices, and then
Brilliant.
using the multi calendar, I'll call it. It's probably the wrong
Yeah.
expression. So
No,
you can
no,
see
you're right.
everything looking
Yes.
forwards
Yeah.
helps. Even with a big portfolio of properties, it
Yeah.
it helps having it all in one place.
Brilliant advice. That's my number one always. Monitor your base price. Use the base price help tool. It monitors the market. See how your base price is compared to the market base price. Make sure you're positioned in the right segment. And make sure you have enough space between the base and the minimum to allow for these fluctuations. I have a final poll for everyone. I'm so grateful to see so many of you have stayed. Thank you so much. I know that we're a couple of minutes late, but I actually want to share one more poll with you guys. Um, Bear with me a second. Sorry about this. Here it is. Tell us if you need any help with PriceLabs features, and we will get in touch with you. So single choice, yes, I need help. No, I don't. Um, well, so many of you are very savvy. Oh, we have some super savvy PriceLabs users here. I'll leave the poll open for now. I'm so sorry I didn't get a chance to answer all your questions. We had quite a full agenda. We had a lot of experiences to share today, but we will obviously check through the questions and we'll get back to you. If you've clicked on yes on the poll, we'll definitely reach out to help you with those Price Labs features. And again, any questions or thoughts you have, please feel free to reach out to us on support@pricelabs.co. I hope you found this webinar insightful, and we're going to try and do more of these for different regions as well. So this was one, we can't include all of them at the same time, but we'll try and do it for different regions next time as well. And yeah, thank you so much again, guys. Thank you so much, Simon, for being here with me today, for supporting me here. I hope that you've also enjoyed this, and I hope that we can do this again.
Yeah, been great. Thank you. If we can ever help anyone, more than happy to. More than happy to.
Absolutely. Brilliant. Simon, you're on LinkedIn, right? So people can always get in
Yes,
touch.
yeah, yeah. Or through you if they want,
Awesome.
if that's easier,
Oh
more than
yeah, of
happy.
course.
So
Brilliant. Thank you so much, everyone, again for sticking around. Super nice to have you, and sorry we're 5 minutes over. Have a lovely evening, and we will speak again. Yeah, do reach out to me or Simon if there's anything that any of us can help with. Have a good evening, everyone. See you, Simon. Thanks again.
bye. Take care.